Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain.
Most people think they can save their way to millionaire status. They are so wrong. When a person is trying to build wealth, money works for them. You work hard for your money, then let it work hard for you too. One way to achieve this is with dividends. If you're seeking inspiration on investing in dividend stocks, there's no better source than Warren Buffett. As a prominent American stock market investor, Warren understands the crucial criteria for identifying companies with the best dividend-paying stocks. This video will enlighten you on the fastest way to live off dividends following Warren Buffett's advice. First of all, what are dividends? A dividend is a payment a business makes to its shareholders from its profits or reserves. This payment is usually a fixed amount per share, which decreases as the number of shares held increases. For example, if a corporation pays $1 per share and you own 10 shares, your total dividend would be $10. Shareholders receive varying amounts based on their share ownership. If a $1 dividend is paid annually on a $100 stock, it results in a 1% dividend yield. Investing in dividends provides several advantages that could be more easily found in more volatile assets. Firstly, even in market downturns, dividends offer a steady and predictable income, providing investors with stability. Reinvesting dividends into stocks allows for long-term wealth accumulation without selling existing assets. Additionally, stocks with higher dividends can offer portfolio safety during economic turbulence or market downturns due to their typically lower volatility than non-dividend-paying equities. During bear markets, income stocks become attractive value buys as lower prices lead to higher dividend yields. The key is to seek stocks with a history of consistent long-term payments and growing dividends for added safety. Strong underlying company fundamentals contribute to a higher margin of safety, enhancing the overall value of dividend stocks. Why is Warren Buffett's advice valuable? Warren Buffett, a globally successful investor, offers insightful advice on dividend investing that shouldn't be ignored. Throughout his career, he's demonstrated a knack for making enduring investments that deliver reliable returns to shareholders. Buffett strategically optimizes profits and minimizes risk, especially during market volatility, by investing in companies that pay dividends. This ensures a steady cash flow from his investments even when others might not be as lucrative. Following Buffett's tried-and-true strategies has made him one of the wealthiest individuals globally. It allows anyone seeking guidance in dividend investments to benefit from his teachings and achievements. Buffett's investment strategy is renowned for emphasizing value stocks, rather than getting swayed by volatile or rapidly changing markets, sticking to a long-term approach. Throughout his extensive investing and business career, he crafted an impressive portfolio through various transactions and acquisitions. This portfolio features well-known companies like American Express and Gillette. Additionally, his stewardship of Berkshire Hathaway led to notable acquisitions such as See's Candy, Geco, and Nebraska Furniture Mart, among many others. Warren Buffett's views on dividends. Warren Buffett often talks about how crucial it is to invest in top-notch companies that share their profits through dividends. His golden rule, rule number 1, never lose money, highlights the preference for safer stocks with generous dividends.
Let me give you a figure that'll blow your mind, I think. I bought my first stock when I was 11 years old. It was the first quarter of 1942. I spent $114.75. I had 3 shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today. Oh man, $400,000 today, one person's lifetime.
This strategy aims to maximize long-term returns on your investment portfolio. clarifying the risks associated with penny stocks or speculative investments. Buffett suggests reinvesting your earnings into more top-notch stocks and choosing businesses with solid foundations and decent dividend yields. This approach aims to foster significant growth in your investments over time.
There will be 1.9 billion 8-ounce servings of Coca-Cola products, not Coca-Cola, but Coca-Cola products consumed in the world today.
A prime illustration of Buffett's successful investment is Coca-Cola. He began acquiring Coca-Cola shares in the late 1980s, and today, Berkshire holds a whopping 400 million shares of the beverage giant, valued at $23.1 billion, a testament to this strategy's success. Buffett's confidence in Coca-Cola's business is unwavering. He once stated, "If you gave me $100 billion and said, take away the soft drink leadership of Coca-Cola in the world, I'd give it back to you and say it can't be done." This confidence is proving lucrative through passive income. In 2022, Coca-Cola paid 4 quarterly dividends of 44 cents per share, totaling $1.76 per share for the year. Given Berkshire's ownership of 400 million shares, it earned $704 million in dividends from Coca-Cola last year. However, the payout didn't stay the same. In February 2023, Coca-Cola's board approved a 4.6% increase, bringing the quarterly dividend to 46 cents per share. This move marked the company's 61st consecutive annual dividend hike, showcasing its commitment to consistent growth in shareholder returns. Over the past 6 decades, Coca-Cola shareholders consistently received more extensive dividend checks each year, despite the fluctuations in the world economy. Coca-Cola adheres to a quarterly distribution schedule. To collect $1,000 monthly from the company, you'd aim for $3,000 per quarter. To achieve this, you need to own approximately 6,522 company shares. This calculation is derived by dividing the desired $3,000 by the per share quarterly payout of $0.46. Since Coca-Cola currently trades at $56.65 per share, owning 6,522 shares would amount to approximately $369,471.30 worth of the stock. If your goal is a more modest target, aiming for $200 per month or $600 per quarter, you'd require 1,305 shares calculated as $600,046, or an investment of $73,928.25. In Coca-Cola stock, 1,305 shares multiplied by $56.65. While Coca-Cola boasts a reliable track record of dividend growth, it's important to note that its shares can still experience volatility. Remember that stock prices vary significantly. Even seasoned analysts are flexible. Therefore, performing thorough research and due diligence is crucial before making investment decisions. Warren Buffett advises investors to stay vigilant about market dividend fluctuations and adjust their strategies accordingly. If there are substantial dividend cuts, consider selling positions. Conversely, if yields rise significantly in a reliable company, acquiring more shares could present an opportunity. Staying informed allows investors to capitalize on potentially more lucrative investment opportunities. Warren Buffett emphasizes the risk-reducing aspect of dividend investing. By paying dividends, a company shares its profits with shareholders. This ensures that shareholders receive a portion of the company's earnings, providing a buffer even if the stock price experiences a decline. Dividends offer a steady income. Warren Buffett backs dividend investing because it can be a reliable source of money. If you're retired or getting close to it, dividends become an essential income stream, helping to cover your day-to-day expenses. Automatically reinvesting dividends is another plus. With dividend investing, you can set it up to reinvest those earnings and buy more shares automatically. This results in getting extra company shares, gradually boosting your ownership. Moreover, this reinvestment process aids in compounding returns, ultimately growing your wealth over time. Dividends offer tax advantages in retirement accounts. One more perk of dividend investing is the potential for compounded growth with deferred taxes in the correct retirement account. This tax benefit not only enhances returns, but also lessens the taxes you owe. You can hold dividend-paying stocks in tax-deferred 401ks or IRAs, delaying taxes on dividends until you withdraw in retirement. In taxable accounts, dividends are usually taxed at the income tax rate. It's advisable to consult a tax professional for your specific rate. Investing in dividends is straightforward. Warren Buffett favors this approach because it offers a simple strategy. Unlike other investment methods, you don't need to watch the market or make intricate decisions constantly. You focus on selecting companies with solid foundations and a track record of regular dividend payments. Consider dividend stocks as assets that pay you for owning them, providing a steady cash flow. Warren Buffett's endorsement of dividend investing highlights various advantages, such as lower risk, consistent returns, improved liquidity, and potential long-term growth. While no strategy guarantees success, incorporating Buffett's straightforward suggestions can significantly enhance anyone's chances of achieving financial stability through sensible stock investments, especially with dividends. Exercising caution is crucial before committing any amount, large or small, to a business or opportunity. Thorough research and seeking advice from an investment professional when applicable are essential steps to make informed decisions. The best time to start investing was 20 years ago. The second best time is now. Please subscribe below and let's enjoy the journey together.